Okay, we're officially live and recording. Give it a few moments. Got SPY and Triple Q pulled up on my screen right now. It's been a red past few days, hasn't it? S&P's down 1.2%. NASDAQ's down 1.3%. The Dow is down 1.2%. All three indexes down today. VIX is 21.69 as of this moment. 10-year yield is down almost 2 points as well. Dollar's up a little bit today. Let's take a look at the heat map. Or actually, I'm going to pull up the sector information. Let's find out where all the money's going. I'm assuming consumer staple. Let's see. Okay, this is as of right now, sector information. So only two sectors green today, consumer staple and utilities. More specifically for consumer staple, household products were green, food products were green, beverages and tobacco green, personal products down 8%. Consumer staple would be a lot more greener if it wasn't for a personal product industry there. So just a quick look. Money's obviously flowing to consumer staple and utilities. Look at the heat map. Get a bird's eye view of what's going on here. Okay, so got little pockets of green here and there. Hey, what's up, Elizabeth? Timmy says, no kidding, try not to look, but did good day trading today. Yeah, that's kind of what I've been doing to kind of battle the drawdown everyone's seeing. Just scalping during the day, trying to make some money with no overnight risk. And that seems to be helping the drawdown. So I'm going to keep doing that. And depending on how the market looks tomorrow, just look at the daily chart on SPY. And that's where we're at a critical point here. We need to see some buying step in soon, or it might start looking a little bit like back here last November. Definitely don't want, for the bulls, don't want the markets to go into a downtrend or possible bear market. But, just some words of encouragement. We're getting a pullback. We're getting a little correction here. We'll see how long it continues. But let's get to why we're all here. Amazon. Yep, Ninja. I just saw Ninja on Discord over here. Amazon's selling off right now. Let's see what's going on. So yeah, their data should be out. Forecast EPS $1.98. Forecast revenue $211.4 billion. That's for Amazon. MicroStrategy doesn't report till 4:20, so about 15 minutes for them. We'll see how their stock price reacts to their data, but let's check out Amazon. Let's see what's up with them, because they're down 7.5% after being down 4.5% today. So Amazon's taking a good hit here. Let me see what the data is. What's up, everyone? Swinging Bull with PB Alerts, back for another earnings stream. We've got quite a few other companies reporting earnings as well. I'll mainly be going over Amazon and MicroStrategy, but we'll look at a few others. Okay, let me find out what their results were, and we'll go over that with everybody. I'm going to get the press release, and we'll take a look at it. So I got a little bit more time before MicroStrategy, so we're going to talk about Amazon. Just pull this over. Okay, their actual conference call is at 5 p.m. Eastern. So about another 55 minutes for that. And I want to look at some other things here. Let me pull this over just for a second. Okay, let's look at the results. 2024. Okay. There we go. All right. Let's see what's going on. Okay, also, Look at this. Okay, so 5 p.m. Eastern for Amazon's earnings web call. Let me get the EPS and revenue. I'm not seeing it on their investor relations page. Let me go to news reports. Let's see, press release right here. Okay, they're still selling off. They're below 200 now. Wow, look at that. They closed the regular session at $222.46. Just waiting for my other page to load up here for the press release. Okay. All right. And again, for Amazon, the estimate for revenue, 211 billion, estimate for EPS 1.94, around there. Let me check the Discord real quick. Yeah, I don't see the data, Tammy. I'm not seeing the data. I'm not seeing the press release or anything. I've been looking all over. So, I mean, they're getting a negative reaction, but EPS $1.95. Okay. Okay, press center. Here we go here. February 5th. The last report I see from their investor relations page is about fundamental. Yeah, Rudel, how you doing? Good to see you over there on YouTube. Yeah, it's been quite the sell-off the past few days. It's 3 red days in a row now on SPY. So just waiting for it to get out of its funk here. We got some support here down in the low 670 area. It's where it bounced on December 17th. We'll see if that holds as like a horizontal structure, but we're getting close. We got this other level here around 676. We'll see if maybe that ends up being the level that holds. But, you know, the pattern since last April is most, all these dips have been bought up. It's been like a dip buy environment. Not really too sure right now. We'll see what the price action is tomorrow. I'd like to see a green candle tomorrow. That would be promising. But yeah, I'm on Amazon's investor relations page, and I'm not seeing the press release for their earnings data. So let me check a few other things. Okay, so Ninja says 195 versus 196 forecast. Is that what you're seeing? EPS down, revenue up. Okay, thanks, Tammy. Appreciate it. So revenue came in at 213 billion, 213.4 billion, and the expectation was 211.4 billion. So they beat revenue, missed EPS. And okay, yeah, there we go. Let me check something else too over here. There we go. Here's the press release and all that stuff. Just take a look real quick. Just waiting for Webull to load up here. There we go. Okay, I think everyone can see that. Can I blow that up? Nope. Net sales increased 14% to, let me actually, I can't move that out. So I want to keep my, the screen on the price action, but net sales increased 14% in the fourth quarter. Let's see here. North America segment sales increased 10% year over year. Okay. And let's see what else they got. Net sale, operating income increased to 80 billion compared with 68 billion in 2024. SIVA, yeah, I can check Roblox. Let me go back to the sticks though. I want to see. Okay, Amazon. I'm going to go 1 minute chart. Okay. A couple little tiny green candles coming in. Let's see what these levels look like. Probably going to go, no, let me go the other way with it. I'm not going to count this upper wick here, just the top of this red candle. Here to there. Okay. So like 204.50. That's like 25%. Need that level to get reclaimed first. Tammy says they raised its spending forecast to $200 billion. Okay. Let's look at a few other things. Okay. So again, they're not actually doing their earnings call until 5 p.m. Eastern. All right, so Tammy, you were right about that. I'm gonna post the so they missed on EPS, but they beat revenue. I'll post this in the comments. There we go. I'll put that on the bottom of my screen so people just now logging onto the stream can see it. There we go. So missed EPS, but they beat revenue. And let's see, web services 35.5 billion versus 34.9 billion, and advertising 21.3 billion versus 21.16 billion. So yes, a little small increase on that. Let me see what else we got. Okay, operating income. The Q1 operating income was a pretty big miss. They the estimate was 22.2 billion, and they reported 16.5 to 21 billion. So they missed operating income. North America net sales, they also, Amazon missed that. The estimate was 127.2 billion. They reported 127.08 billion. So just kind of a slight miss there. Also, physical store net sales, they missed on that as well. And also CapEx for 2026. I think this is what Tammy was talking about. The estimate was 146 billion, and now they're saying 200 billion. So just a few reasons why it's down right now. It is starting to curl up a little bit. Next level up, probably around 208 a share. Let's see where some support might be. Let me go over here. Okay, so it's down. Let me go to TradingView, actually. That'd be better. TradingView, there we go. Okay, so you see the price right down here. That's where it closed the regular session. And then you see this blue line down here, right here. So it's already below where the price action support was. Next level down could be, yeah, 200 a share. And it already kind of came down to 200 a share and bounced. So my support level number one on Amazon is just that mental level of 200. That's where I'm going to put that. It's right here. And that's kind of where some buyers stepped in. 200 a share right there. That's my support level number one. So let's see if it can hold above 200. It's already starting to curl up pretty good though. So that's nice to see. Take this from here to there. And yep, next level up around 208. And then I'd be looking at 211 and then 214. 214 is the golden fib. Would love for it to break that. And then I'll be pretty confident it's going to retrace all this. But it's got a little bit of work to do. Rule says, any thoughts on Bitcoin? Yeah, I mean, you know, it's a big it's the biggest crypto stock out there. I was talking about this earlier and actually posted this in the Discord, and I'll just kind of go over with everyone what I was talking with my Discord members earlier today, because I know a lot of people are freaking out right now. Okay. You know, a lot of people maybe just started trading, you know, the past 3-4 years or something. Maybe some people haven't experienced something like this before. But, you know, I've seen worse. I've been trading for about 10 years now. And, you know, one thing, I kind of had this graphic made up. You know, when the market sells off, it isn't punishing patience. It's rewarding it. So adding great stocks at a discount during fear is how long-term wealth compounds. It's So true. So I'm actually going to start taking nibbles on some of my favorite stocks. But I'm going to be smart about it. And that's the thing, we're seeing a lot of good discounts on some stocks, but you got to keep some dry powder on the side, kind of slow drip over time. And as long as you're smart about it and the underlying stock is a solid stock, I mean, this is where real money is made. When everyone's fearful and panicking, the smart people have cash on the side and they're ready to start scaling in at discount. It's very important, and a lot of people that have been trading for a while know this. So, that's why I always harp in the Discord to everyone about keeping cash. I don't give a shit if the market's going to the moon and there's no sign of any weakness or anywhere. That's because no one knows the future, and you got to keep some dry powder on the side to be able to capitalize on the discounts. And I'm not talking about, okay, we've had 3 red days in a row on SPY, so okay, all in. No, that's not what I'm talking about. I'm talking about a slow drip over time, just in case the selling is prolonged and continues. And you got to be able to manage your money that way. And don't be throwing everything you got on the first 1, 2, 3 red days. This could be like a whole another month of selling ahead of us. We don't know. If it's anything like 2022, I'm not saying it's going to happen, but what if we have a 2022 repeat? That was basically a downtrend the whole year. And me and the other coach, Mad Maverick, his name's Lee, over here in the Discord, we made a lot of money in 2022 when everyone was panicking and F the stock market, it's all a scam. Everyone was saying that. Me and Lee are over here shorting the spikes during 2022. We made a ton of money. So we got to figure out, what kind of market are we in? And we got to be able to adapt our strategies accordingly. I run a ton of the wheel strategy. Wheel strategy doesn't really work in the bear market, right? I mean, unless you're wheeling the inverse stocks, or the inverse ETFs or what have you. But I'm until I know that the market's in the clear as far as possibly entering a prolonged downtrend or like a big correction, kind of like, what was it, like February to April last year? That was a 20% correction. A lot of people have never seen that before. But what ended up happening? The markets went on and rallied hard. I mean, we can go back here. This was the market correction right here. This was just last year, February to April. That was a 20% market correction. Any more bleeding outside of that, we would have been considered we're in the bear market. We get corrected over more than 20%. I mean, that's technically could be a bear market there. But luckily, February, April last year, it just ended up being a 20% correction. And look what happened. Everything went off to all new highs. So, if you still believe in your underlyings, the worst thing you can do is panic sell. That is the worst thing. And if that's what you're doing, you don't really understand how the market works. The people that have been in the business a long time, they're jumping for joy right now because now they can start slowly accumulating more of their favorite stocks, and they're going to be the winners in the long run. The people panic selling, that's it. You're done. It's not working out. You're not understanding how the long game works. Maybe you're too busy just trying to hit a big one all the time, and for me, I just want the slow, consistent gains over time, but also managing the portfolio in a way where we always have some cash on the side. And you know, I don't think of it, oh, okay, I'm sitting on some cash and it's not working. That's not true. The cash is in a money market account, still getting 3.5% annual yield. It's fine. I'll let it sit there and make a little bit of money every month. That 3.5% yield, annual yield paid out through a monthly dividend through the money market account. Most brokers are doing that. So it's okay to have some cash on the side. And what's been happening the past 3 days? This is why you need cash on the side, because we don't know. I mean, look at 4 candles ago, 4 trading days ago. Big green candle. A lot of people were thinking, oh, okay, you know, we're out of the woods. Because remember the 2 days before that, especially on Thursday, January 29th, last week, or I'm sorry, yeah, it was last Thursday. You know, that people were freaking out and SPY had come below the 9 and the 21 EMAs on the daily chart. And everyone's like, oh, shit, oh, no. Very next day, you know, back above the EMAs, printed this green doji. And then we get this monster green candle. Everyone's like, okay, we're in the clear. You just never know. Nobody knows the future. That's why managing your portfolio and having a plan for your allocations and things of that nature is so important. And fast forward to today, 3 red candles in a row, and now everyone's crying the blues. So anyways, you know, I just want to talk about a few things at the beginning of this stream, because I know a lot of people are freaking out right now and I'm seeing a bunch of drawdown. Well, one of my other accounts, it's a wheel account. I got a bit of capital in there. I'm seeing like 15% drawdown on the portfolio right now. Yeah, it sucks to look at every day, but you know, I'm confident in my underlying stocks. I know the drawdown will eventually go away. And until then, I'm going to be, you know, mainly how I'm making money right now is scalping during the day. Because I don't want to put any extra capital into the market as far as going long until the bottom comes in. And I'm even willing to sacrifice some of the bottom, you know, some of the reversal to make sure. And that's in the form of watching for higher lows on like, you know, the 4 hour and the daily perhaps. You know, start with like 1 hour, 4 hour, and then let that bleed into the bigger time frames and you'll be okay. But as long as you're confident about your underlyings, you shouldn't be upset about the drawdown. Most investors that have been doing this a long time consider this a discount. You know, that's how real wealth is made. But you're not able to participate if you've gone through all your cash. That's why I usually save at least 20-30% in cash, just sitting there for times like this. And I added some shares on one of the stocks I've been wheeling. I added some shares today, and it's just going to be like a slow drip over time. As long as this selling continues, I'm going to be adding to my favorite stocks. Not financial advice, but this is how you survive. And, you know, you got to be able to conduct yourself accordingly. This is where discipline really comes in, because everything's all fine and dandy when the market's bullish. Everyone's like, yay, hurrah. As soon as shit hits the fan, that's when your discipline gets tested, right? And your emotions. But you got to try and think about it in a bigger picture. And look, if you didn't have cash saved, you know, cash on the side, like I always do, you know, just consider this a learning experience. You can absolutely do better next time. It's okay. Some people were over leveraged when, you know, 3 days ago, before this 3-day sell-off started, A lot of people were probably over leveraged and had too much in their positions. And, you know, now look today, but that's, and I don't want to sound like a broken record, but cash is a position. And as far as being diversified, that's obviously a good thing. Like if I have 5 positions that I'm long on, I always make sure each one is in a different sector. I mean, that's the easiest way you can start diversifying is if you're long on 5 stocks, don't have everything in tech. I mean, that's just like a noob, you know, that's what noobs do. They don't know about diversifying, but that's gone a long ways for me over the years, is making sure each one of my positions is in a different sector. That way, if one sector gets hit, your other sectors tend to keep it afloat. But, you know, you got to start thinking about this as a business and not a casino. So just some words of encouragement. This will pass. It will pass. It's going to be okay. And this is also a reason why trading the proper underlyings is important. It's got to be a company you believe in long term. So anyways, back to Amazon. It looks like they're making a good effort at bottoming out here at 200. They're trading at 206 right now. Siva asked, can you tell some good stocks to buy in this dip? Yeah, I mean, I'd say any of the Mag 7 if you want. I mean, I know Mag 7 is loaded with a bunch of tech, but you got Amazon in there, and Tesla is kind of, you know, automaker, but I think he's shifting more to robotics and robo-taxis and stuff like that. But yeah, I mean, any of the Mag 7 would be a good buy. Here, I'll take a screenshot of this. This is like my little Mag 7 watch list right here. But start a little watch list, Siva, and you know, if it was me, you could start trickling into any of these. But really, a little checklist to look for stocks that I think, you know, just my opinion, I think would be good to add at a discount. And again, I'm talking about slowly DCA. I mean, maybe even over the course of 6 months to a year. You know, if you got, like, let's say $5,000, I'll just pull a number out of there. Let's say you got $5,000 of cash that you had on the side for situations like this. You know, maybe divide that by 12, and then maybe every single month you can do an ad. That's what I mean by DCAing. I'm not talking about DCAing over a week. I'm talking about long term, because the reason is we don't know how long the selling is going to last, and if it ends up being a 2022 situation, it could be all year. We just don't know. So I'd rather have the dry powder by have my DCA spread out over 6 months to a year. And even if you wanted to break that into weeks, you know, take however much cash that you have that you're going to use to buy great stocks at a discount. And, you know, I mean, we can take, we'll just take a year. So let's say you got 5,000 cash. Let's say every single week you want to slow drip into your favorite stocks. Well, 5,000 divided by 52. So now, you know, it's basically $100 a week. You could start, it's like going shopping. You know, it's like going shopping at the discount store, right? But just a little checklist because that was a great question. Siva is like, what are some good stocks to buy in a dip environment or a sell-off or a correction environment? Just a few things. I like companies that have a positive PE ratio. I like companies that have a positive EPS. That'll take care of a little bit of the fundamental side. And I like companies that have a debt to asset ratio below 100%. If it's over 100%, then that company is over leveraged, and that's not a good thing. So positive PE, positive EPS, debt to asset below 100%. The lower the better on debt to asset. And then a nice cash and equivalent position. I mean, just those 4 things right there, you can weed out a lot of the crap. And FinViz actually has a great screener. You can plug all that into a FinViz screener and it'll spit out a nice manageable list for you. And then just look for companies that you like. And, I would start there. That would be a good starting point instead of just like randomly buying stuff, do a little bit of DD to make sure the company, another thing, I like the companies to have a positive net income. That would be a plus as well. So those are the companies that I'd be looking for to pick up on a discount and slowly nibble on over time. And look, if the market, and let's just say that situation I gave where you got $5,000 in cash, you want to take advantage of the discounts. And we figured out if you're going to do it over the course of a year and maybe do buy some every week, it comes out to about $100 a week. But let's say 3 months go by and the markets recover and reverse. It ended up just being a regular correction, and now we're back to the races again. It's okay if you didn't add all of the 5,000 you had on the side. It's okay. Now you still have a cash position, and so you don't have to add it all. I'm just saying you don't want to end up in a situation where you have all your cash allocated to the market and now the market is still selling. So now you don't have any more firepower to continue dripping into it, right? So you got to try and think long term and look at it this way. If the market reverses halfway through your drip campaign, then that's okay. Then you don't have to spend the rest of the cash that you were planning on spending, So anyway, it's just, it's already been 30 minutes, but I thought I'd take the time today to just talk with everyone about money management because it's super important. And that's where most people falter. Number one, they didn't have a 20 to 30% cash position. Some people sit on 50% cash. It's even better. But, I just figured I'd talk about this kind of stuff during this stream because I know a lot of people are not liking things right now, and they're logging into their broker and seeing all this drawdown, and they're losing faith, and they're thinking about just hanging it up, and I'm not going to do this anymore or whatever. But you got to think long term, and situations like the past 3 days, and who knows if it continues in the future. Situations like that, most experienced traders and investors look at this as a shopping spree, right? So it's going to be okay. This will pass, as it always does. But you got to be able to keep some money on the side. Because imagine buying at the very top with all your cash, and then the market enters a bear market or something. It's going to take you a while to get back. But if you keep cash on the side, now you can slowly lower your average over time. And I'm not talking about just any stock. I'm talking about solid stocks, the blue chippies or just, companies that have a really big name and they're going to be okay. You'll be just fine. And maybe this is a rude awakening to a lot of people to stop investing in garbage. The biotechs and the therapeutic companies and the pharmaceutical companies, all that is trash. That is all trash. No offense to the day traders out there that trade the pre-market runners. And actually, hats off to you if that's what you're doing, because no overnight risk there. You're not really swinging those. So it's okay to day trade those stocks. I've made a lot of money trading the pre-market runners, but as far as holding them overnight and as like a long-term position, you got to cut that stuff out. It's funny seeing like these really, really shitty companies that have this huge social media presence, Wall Street Bets and Reddit and all that. More people are getting hurt than people that it's doing good for people as far as trading that way. So don't fall into the traps and the pump and dumps. If you want to take this seriously, you got to start, trading better stocks, basically. But anyways, hopefully I didn't hurt anyone's feelings out there, but I just say it like it is. That's how I am in the Discord. I don't sugarcoat things. I don't tell people what they want to hear. I say what I think is reality, and I think more people than not appreciate that about me, because I'm not trying to fake things and like beat around the bush, and I'm all about transparency and saying what's on my mind, and I think we need more of that in today's world. So anyways, Amazon got they had a big surprise on CapEx. They're going to be spending a lot more money than investors thought, like 55 billion in capital expenditures, 55 billion more than what was estimated. They missed on physical store sales. They missed that. North American net sales, they missed that. Operating income, they missed that. EPS, they missed that. There's some red flags on their earnings. Is it a terrible red flags? Like, oh no, the company's done it now. No, these red flags are easily able to overcome. I think it's probably just short term. I mean, it's Amazon, for crying out loud. They're not going nowhere. They'll be just fine. Q1 guidance for Amazon. Here, I'm going to post this courtesy of my friend Shai Balor. I met him in Delray Beach a few years back, and we hung out, and it was a good time. We'll post this there in the Discord, but that's just like a summary. So Q1 guidance, they actually increased the Q1 guidance a little bit. Estimate was 175 billion. They raised it to 176. Operating income they also raised that guidance. So they did raise the guidance. I think the big thing here is the CapEx, though. That's what investors are kind of, blinking an eye at here. So CapEx was way off, and they missed EPS, but I think that more or less came in line. So again, I'm looking at the $200 level on Amazon as potential support. Looks like it's trying to form one of these lowercase h patterns that tend to be bearish. We'll see if it comes down to 200 for a retest, but that's where it bounced from just a little bit ago, about 30 minutes ago. Wow, it's already 4:40. This time kind of just flew by when I was talking about risk management and portfolio management and stuff like that. But these things are very, very important. My people in the Discord know. I mean, how many times do I say keep cash on the side? I've been saying that shit for like years now. And this is exactly why you should do that. I can't tell you what to do. I'm just saying what I would do and what's worked for me over the years to be able to not only survive, but thrive, right? We don't just want to survive. We want to also thrive, right? And there's certain things you can be doing with your money management techniques that can help you. But to answer Rudel on YouTube, yeah, Bitcoin, total dip buy. What do we know where the floor is at? I don't know, but like I say, it goes back to what I was saying earlier. It's a great time to start DCA into your favorite stuff. Bitcoin is one of them. There's going to be a lot of money to be made when Bitcoin bottoms out and goes back to 100 plus. There's going to be a lot of money to be made. Which side of the field you're going to be on? The one that panic sold, or the one that saved cash to be able to get the dip buy. You know, so you got to kind of figure out where you want to be there. Anyways, MSTR looks like getting a negative reaction as well. We find out when MSTR's earnings web call is. Amazon's web call is in 20 minutes. And let me go ahead and get the link for everyone for that. I'll post it in the comments here, save everyone some time. Okay, that's the link on the bottom of my screen. That'll take you to the web call. I'll post it in the Discord too. Ninja says, "Why is Roblox up?" I'll take a look. But anyways, when you get to that link on the bottom of my screen, this is the page you'll see. You can see right here, 2 p.m. Pacific time, which is 5 p.m. Eastern. And then the hyperlink right here, click for webcast. I'll get you right into the call. Starts in about 20 minutes. Roblox, let's see what's up with them. RBLX, we'll put them on the right here. Yeah, Roblox has caught a bid. It's up 20%. All right, let me see. Roblox. A lot of people saying, I can't believe I sold my Roblox before this earnings, because now it's up 20%, right? My feed has been acting up lately, so I might have to switch to a different feed, but RBLX. Let me look at a few things here. So Roblox, here it is. So their forecast EPS was negative 0.49. Oh, pop-ups. Negative 0.49. And their forecast revenue was about $2 billion. So let's see what they reported. Let's see what they reported. Okay, here we go. Roblox. And Roblox has been, I mean, just zoom out on Roblox. This thing's been beaten to hell. Look at the weekly chart. Look at that. This thing was at 140 bucks. Beginning of around Q4 last year, middle of Q4 last year. This thing's just been in a straight, this is weekly candles here. But let's look at a few other things. So, okay, so Roblox did beat EPS, and they did, they beat revenue as well. They actually beat revenue by quite a bit. Here, I'll post this in the Discord for Ninja. There you go, my friend. I'll put this in the YouTube chat and the X chat as well. There we go. Roblox double beat. Revenue estimate was 2.09 billion. They reported 2.2 billion. It's pretty good. And also their revenue year over year for Roblox was up 63%. I bet investors are loving that figure. So revenue up 63% year over year, and revenue's up 16% quarter over quarter. Pretty good. Implied move on Roblox is around 14%. So it closed around 60. Just seeing if it hit its expected move. Yeah, it's already passed its expected move. Expected move was only like $8, $9 a share. It's up 12 bucks right now in post market. I want to look at a few other things on Amazon. Let's see. Oh my God. Some of these people on X are cracking me up here. All right, so Amazon taking a hit. Overall, I think Amazon be just fine. And just kind of to summarize some of these things, the AWS beat And cloud growth accelerated to 24%. That's kind of leading the pack for them. Slight EPS miss, is more noise versus trend. Big picture, AWS once again carried profit momentum, reinforcing that Amazon's valuation and earnings power are still fundamentally tied to cloud acceleration, not retail optics. Because we already went over their physical store sales were horrible. They missed it. But it's all about the AWS with them as far as revenue. It's kind of carrying the profit momentum for them. And cloud demand is re-accelerating, not stalling. All right. So bottom line is, I think it was a good beat by Amazon. I know the CapEx kind of threw investors off beat a little bit, but I personally think this is going to be a short-term pullback on Amazon. I really do believe that. Not financial advice. I just, you know, if you're an Amazon fan, a longtime Amazon investor, who I'd be trying to scoop this up in the low twos probably. And again, like I was saying earlier, it's just my opinion. Not all at once. Don't use all your disposable cash all at once. Slow drips. That's how you win at this. You want to make sure you keep dry powder on the side, because you know sometimes we don't know when the bottom's officially in. But absolutely, if it was me, I'd be taking little nibbles down here at 200, and then you know for some reason that doesn't hold. Well, hey, you know, go back to trading. You know, if for some reason it doesn't hold, well, you got more ammunition. You got more ammunition. Let me go daily chart here. You got more ammunition if it does come down to, like, I mean, look at this previous support here around 166. This is the daily chart on Amazon. You know, maybe take a few nibbles here in the low twos, keep some dry powder in case it takes another, in case it corrects a little bit more to the 160s. But it does look like might be a small little gap here around 195. 195 to 198, around there. Doesn't look like it's been resolved yet, but might be another small little gap down here around 177, 178. So, you know, like I say, you know, you just got to make sure you keep some cash on the side to be able to continue DCAing. You don't want to run out of cash when you're in the middle of DCAing, you know. And as long as it's a solid underlying stock, you're going to be okay. All right. So anyways, we got Amazon's reaction. MicroStrategy, they're down 4.5%. Let's see what happened with them. MSTR. Okay. Okay. Oh, boy, I'm cracking up. I want to find out when MicroStrategy is doing their earnings web call. That's what I want to find out. I know a lot of people probably want to know about that. There's rumors going online right now that MicroStrategy is going bankrupt. Don't believe the noise. Don't believe the noise. Okay, 5 p.m. Eastern is when MSTR is doing their call. So about another 12 minutes. I'll put that link in the comment as well. There we go. I'll put it in Discord. But yeah, that's really all I got for today. You know, I mean, of course, we had Amazon's earnings and MicroStrategy, but I really wanted to just chat with everyone. You know, just some words of encouragement, because you know, I've been through this kind of stuff before, and it's not the end of the world. We're just experiencing a pullback. That's what markets do. Okay, they pull back, they correct. It's all part of the game. And like I say, as long as you believe in your underlyings, this too will pass. And for me personally, I'm going to use this as an opportunity to start accumulating more shares of my favorite stocks, particularly the ones I've been running the wheel on, because those need some love right now. But that's okay. Don't feel upset or bad that, you know, and thinking that the problem is you because you're seeing all this drawdown. You know, everyone is seeing drawdown right now, unless you're just strictly a day trader and you go cash every night. And, you know, those people don't care. Those people are having a heyday being a bear right now. So, but anyways, yeah, my name's The Swinging Bull with PB Alerts. If you're looking for a new home, check out our Discord. There's some links in the description. I'm always here for my Discord members as support, as a coach. Got like over 100 people in my coaching program right now. We do run a lot of the wheel strategy, but I also been doing a lot of spread trades. Actually, last 10 spread trades have all been winners. So we're actually off to the races this year, month of January and going into this month. Spread trades have been crushing it in a very good way. So if you've ever been interested in trading spreads, come check us out. You know, I can definitely show you the ropes and show you how to do it. But yeah, Siva, absolutely, you're very welcome, and it's good to see you, and appreciate you coming out to the stream. But yeah, I hope everyone enjoyed. This is the last earnings stream of the week, so I'll pick the ball up again. I do these earnings streams, and I don't really stream the actual earnings calls, the webcasts. I come on before the calls, and we just kind of go over the data drop. We find out when their call is going to be. We go over any guidance I can find, the EPS, the revenue, different line items of the data as far as you know, net income, stuff like that. Do a little DD on the company, look at some levels on some bigger time frames, stuff like that. Just kind of give you my opinion about things, and we have a lot of fun. Definitely not here to sell anything to anyone. I just want to hang out, have a good time. But of course, like I say, if you want to join the Discord, it's always there. If you want to come join, it's fine. But yeah, hope everyone enjoyed. I'll be back. The next earnings stream will be next Tuesday. But I hope everyone has a fantastic night. And until next time, I'll see everyone in the very next stream. Cheers, y'all.